Hi, so it's just Tanya here from Cannon & Co. and back with Emma from G3 Mortgages, just talking about kind of the mortgage industry and what's been going on lately. So Emma, can you just give us an update on what we've had in recent weeks and what's actually been going on?
Yeah, so in the last few weeks, we have seen a lot of lenders withdrawing their product range, their interest rates at short notice and repricing upwards. So mortgage brokers are currently tearing their hair out because they'll get an email from a lender saying we're pulling rates at 8 o'clock tonight. If you've spoken to a client about those rates, we need to get in touch with them quickly, and they need to make a quick decision, basically. The application secures the rate for the client, so we can't just do a mortgage in principle to secure a rate with 99% of lenders. So it is a case of sometimes having to make a quick mortgage application to secure the rate and get the product before they increase the next day.
But the Bank of England bank rate has stayed the same, hasn't it? So I think that's what people are worried about, but actually that's not why rates have changed, is it? So the Bank of England was almost a positive from what we've talked about, isn't it? In that it just held, it kind of kept in a freeze position, is that right?
Yeah, so the Bank of England had their Monetary Policy Committee meeting last month. They agreed to hold interest rates at 3.75%. This is a good thing. Andrew Bailey's comments afterwards, the governor of the Bank of England, was very much that we're in a wait and see position, and they'll continue holding until that until they see a real reason to increase rates. Now, times are different now to what they were sort of in 2022, when inflation was being impacted by consumer spending and sort of general stuff at home. If inflation, which we expect it to be a lot higher for March and April going forward, if that continues to increase, there is an argument that even if the Bank of England could increase rates, that won't help. So it's very much a different scenario that we're in now. At the moment, we've got base rate tracker rates are still very, very competitive. So whilst they are variable, they are an option for some clients to take instead.
Perfect. So I think, like you say, I think the biggest thing for us is actually why there's a lot of negative media attention, and mortgage lenders are obviously behind the scenes pulling their hair out. We do like quick applications. It's important to understand that actually it's not as scary as it's been made out to be. The Bank of England base rate has held, and we will follow up this. We'll do separate videos on like mortgage swap rates and things like that to understand why rates just change in general, irrelevant of kind of the Bank of England base rate. But I thought it was important to kind of hear from you what's actually happening at this point in time.